Welcome back, everybody. We're doing a quick update on the markets, doing a little bit on the Federal Reserve, SPACs, and new partnership with Amazon. Let me know what your thoughts are, what you've seen in the market today. Let me know what you're seeing, what questions you have. Feel free to just chime in, comment below, whatever your thoughts are. Definitely looking to make this more interactive. Want to know what you're reading, what your mindset is, how you're looking at the market. So to start up, uh, today and tomorrow, the Federal Reserve will speak. They'll be talking. Federal Reserve Chairman Jerome Powell will be speaking today. There are some major concerns about rising inflation. And yesterday and the week before, Christine Lagarde from the European Union talked about the rising yields on the 30 years. There are really big concerns that we have trillions of dollars in stimulus. If you're not investing in hard assets, there's a very high chance of inflation coming out of this pandemic. So people are really, really looking into the meeting today and tomorrow. The major concern is that the Federal Reserve will tighten the interest rates. There'll be a spike in interest rates. There'll be tightening in the economy. And just become more difficult. So what will happen is that the valuations of companies will begin to shift. Right now, at 0% interest rates, the Federal Reserve is buying about $120 billion in bonds every single month. They're trying to reduce their balance sheet while it's still cheap to do that. And everybody else is actually overextending themselves, getting more leverage, and getting free money. So when interest rates begin to rise, equity valuations will begin to drop. There'll be an inverse relationship between the two, and that is one reason why people are buying more bonds, longer-term bonds. They're betting that there's going to be a shift in the interest rate, and they're going out. They're extending the duration. So that's a big, big thing for the next 2 days. There's a lot being discussed on that end. If you're an equity investor, you may not be aware, but the big shifts happening in the fixed income markets. So moving on to the next piece, Janet Yellen, the Treasury Secretary. Obviously, Bitcoin has been the biggest topic in the last 30 to 60 days. I think it has 5x'd in the last 12 months. Really interesting. The asset class is doing very well overall, so it's very exciting. But there are a lot of anomalies if you're not familiar with blockchain and what happens behind the scenes with technology. Bitcoin itself is actually a very inefficient asset class. One, it's not considered a security, it's considered an asset. People focus on it as a piece of property. So that's where it sits today. Inefficiencies actually come from producing and mining Bitcoin. That's the biggest area of our biggest gap. The amount of energy that's consumed to process these transactions is staggering. It's definitely a speculative asset. People should be aware. It's very volatile. I think it hit $58,000 from the beginning of the year. It was at around $30,000, so it's almost doubled or something like that. It's moving a lot. It could shift 10-20% a day. One thing people could sell off naturally, or there could be a scare, there could be a market movement or something like inflationary. There's a lot of concerns that the dollar won't be the reserve currency for the US and the world going forward. So people are buying Bitcoin as a hedge. Since it's not correlated, it moves in the opposite direction and it's a better asset than gold. So Janet Yellen, again, she thinks this is extremely inefficient. I don't think it's an efficient tool. There's a lot of other ways to look at this or to buy things that are more effective and better ways to make money. It's pretty concerning that corporations are using the treasury money capital to buy Bitcoin and putting it in such a volatile asset. But in the case of Tesla, they made over $1 billion in the last 30 days and less. So for them, it worked out really well, but it could have easily gone the other way. They could sell out their position of $2.5 billion and use the house's money to continue to own Bitcoin, but they have a gigantic balance sheet. They have billions of dollars in assets and capital. So for them, it's one way to diversify their funds. And in this case, they made a lot of money very fast. So on the topic of electric cars, there have been a couple SPACs that have come to market. Electric cars have been the hottest SPAC vehicle to come, no pun intended. Lucid Motors went public at $11.8 billion. Their pro forma equity value is around $24 billion. This was a really hot SPAC in the last 2 weeks. Churchill Capital, managed by Michael Klein, took this company public through a reverse merger. It's a very exciting startup in the EV space. It's obviously alongside with Tesla, Nikola, Fisker, and Lordstown Motors. But all those other companies, when they first came out to market, were much smaller. Nikola is a fraud. They haven't produced a single car. Fisker and Lordstown, they were all below $4 billion. So the Churchill Lucid deal is gigantic at almost $12 billion. But it's important to note what happened in this trade in the last 20 days. First up, there's a lot of excitement. There was some leaked news that took the stock from the $10 up to $30, $40, $50. A lot of people were very excited about the industry. They had heard there was a chance of them buying something in the electric vehicle space. Lucid happened to be the best and most promising target. But when this deal consummated this week, the stock dropped by more than 30 to 40%. It dropped more than the last day or two as well. Andrew Ross Sorkin spoke about this on CNBC and Twitter. He said, why is this so concerning that so many retail investors are losing money on these type of deals? And then Chamath rebutted, said, a leak of this type of news is much more impactful to retail investors because they trade on the news. And in this case, they bought on the rumor, sold on the news, and they lost a lot of money. So it's very unfortunate. A lot of institutions, Michael Klein, the Lucid team, they made a lot of money. They have more than enough capital, according to Klein, for the next 2 years. So it's very good for them to get into the position of making a very strong electrical vehicle company. This is amazing for the industry because Tesla's worth hundreds of billions of dollars and they led the pack. But there are a dozen more that are coming to industry and making an impact, from battery technology to autonomous vehicles. So all across the board, awesome to see this. Another SPAC that I've been aware of, kept my eyes on, is Starboard Value. It's an amazing activist hedge fund. They took the company, they're taking the company Cyxtera, which is a popular cybersecurity data center company, public through their SPAC. It's going to be a $3.4 billion deal. Manny Medina from Medina Capital and BC Partners, a major private equity firm in London, are rolling 100% of their equity stake into this combined company. This is a gigantic cybersecurity deal. It's definitely one of the biggest. The proceeds will be around $650 million, and it's definitely going to be moving in the right direction. We'll see a lot more of these companies go to the market. It's very exciting to see which tech companies are taking advantage, private tech companies are taking advantage of the SPAC vehicles in the right fashion. Cyxtera is also spinning off Appgate, so it's a very good asset that they'll be merging in another entity. So it's a good way to unlock shareholder value, take advantage of the equity markets, and then use that money to build a business, buy more assets, and continue to grow. So it's amazing, good for that team, Manny and the team. And last but not least, I'd like to talk about Amazon. But before we get into that, let me know if you got any questions, anything that's on your minds about the market and investing. Definitely like to hear what you're thinking about, either about the Federal Reserve or electric vehicles, SPACs, or anything else. So Amazon is partnering up with Dish. This will be an outside test for a mobile wireless service. This is a big deal for Amazon, really. I think Dish bought Boost Mobile several years ago. So this was from the Sprint T-Mobile deal. T-Mobile I think had to divest a couple of assets. So Dish had gotten into this market away from satellites and now moved more into telecom, cell phone wireless technology. So Amazon right now looks like they're testing some new devices and services in Europe. This is a big move, obviously, with Tesla. Well, not Tesla, but SpaceX, Elon's other venture, launching Starlink and providing global broadband. There's a lot of happening in the telecom world and the telecom markets. So Dish is saying that Amazon will have to fund or back about $10 billion to build out a network in the European markets, and maybe as high as $20 billion. We don't know yet, but we'll see what happens. This is a pretty big extension for Amazon. They're obviously already in so many different verticals. They have international reach, but telecom is something they haven't been able to do well, or haven't even done to some extent. They failed with their Fire Phone several years ago. They haven't done much in this space, but to have access to broadband and the internet, it's very similar to like Google Fiber and Verizon or AT&T acquiring just the hardcore real estate assets of technology. They obviously have an extension of data and cloud, so they have a very good understanding of the infrastructure at one level. But telecom is a different beast. So it'll be interesting to see what happens with Dish. Dish is a major provider in the cable networks, so the Dish networks. So it'll be very exciting to see how they expand to this network. What's going to happen in the European markets? I wouldn't bet too big on it because this space is very competitive. And Amazon is, even though they're a big monster, there are a lot of other beasts competing on the same form. So there's very likely that that $10 billion will take years before it does a good return on investment. So that wraps it up for the market update. I wanted to do a brief 10, 20-minute market update on a more reoccurring basis. If you have any concepts, ideas that you want to talk about that you think are interesting, feel free to chime in. Feel free to stream. You can find me on Twitter. I'll look at it on my phone at the same time. I'm answering questions all across the board. Also, don't forget to subscribe to the Financier. You can find it on LinkedIn. Last week, we spoke about SPACs. This week, we'll be talking about more economics in the world of technology. You can also check out the Tech Financier for more information. And feel free to reach out to me either on LinkedIn, Twitter, Quora, or YouTube, any platform that you think is most accessible for you. Until then, I'll see you guys later. Take care.